Good morning, traders. Welcome to the first day of 2021. All right, ready to rock and roll into the first full trading week of the year, I guess. Welcome to Monday of this beautiful week. Make sure you swing over to ssftg.com/brief to grab your morning brief levels. Before we jump in, we always need to check the news so that we know what's going on and when. So as far as the news calendar goes, we don't have, there's not a ton of stuff going on today. But realistically, if we look at what's going on, we've got the OPEC meeting. We've got some oil stuff going on. That's really about it. If we go down the list, we've got the manufacturing PMI at 945. That's a medium news announcement, forecasted at 56.5. Next medium news announcements at 10 o'clock with FOMC member Bostic speaking. And that's really about it until the afternoon. In the afternoon, that's nothing more than speculative net positions. So there's not a whole lot going on for today. So as far as the news and everything goes for today, it's relatively calm and quiet, which should make things at least a little bit more reliable for the first day back. All right, with the news out of the way, the first one to the party then, jumping in for today, going to be 1/4 of 2021. It's going to take a second to say that the right way. Those old habits die hard. But looking at the NASDAQ, we've got some very nice continuation to the upside. Buyers are obviously showing some pretty good bullishness. The big thing that stands out here is that the market's making higher highs, higher lows, and even after the weekend, it pushed down, and that push down really just kind of got the earlier sellers out at break even that were stuck from down there. And the only reason I say break even is because as soon as it hit it, there was a reaction. It dipped underneath it, immediately went back above it. And as soon as it went back above it, it reacted again. It's fairly obvious that the sellers that were there jumped ship. And that's likely what's causing a lot of this rally to the upside. And it could even be that shorts are still stuck. But the big area of interest at the moment is going to be around these 12,936s. It would be nice to see it dip a bit further down. We've got this spike in channel structure, and typically spike in channel structures are better off if they dip down to the bottom. So the 12,910s may be a bit more interesting. Either way, buyers are looking for a continuation move from here. It's just a matter of how low they want to get into it. The S&P is in a very similar situation, but it's trying to hold on to the channel a little bit better. The NASDAQ had kind of a dirtier looking channel, whereas the S&P, it's fairly clean all the way up. It hit the highs, respected the highs, and now it's starting to pull back. The logical zone of interest then would be seeing the market dip back to, the channel lows. That's where all of the buyers seem to want to come in. And given that we're coming off of the highs with 1 and 2 presses, it wouldn't be a surprise to see them try to make an attempt at a third. A lot of times the third one, that's where it's the deciding factor if they're going to go higher or fail. If it makes a lower high, then it's fairly obvious. If it makes a higher high, it's still not necessarily out of the woods yet, because if it quickly fails, that could cause some problems too. I wouldn't necessarily have to worry so much about the buyers failing, but we're sitting right on top of resistance, and that's the problem when you're trying to trade at a poor location. So it makes a lot more sense to see if we can get a dip back to like the 3760s for buyers to reload at a more beneficial price. See if we can get some form of a stochastic negative divergence along those lines would help out quite a bit, I think, just in aiding the buyers and pushing back up. Over on gold, we're dealing with a market that has just a wide open gap all the way to the upside that got left behind. And the market's been screaming higher ever since. And with this rally to the upside, realistically, we don't have much of a swing low to work with except the new one that formed last night. That's about it. And that's obviously not really the low. So we're left in this awkward situation of, well, this isn't finished yet. There's a lot of business that needs to be done down here to fill in that gap. And a lot of times when the market's coming in from a weekend gap, that can get filled just like any other day, or just like any other gap rather, typically the same day, if it's not too big. But if it doesn't fill within the same day, then you're usually looking at spending multiple days away from it before it starts coming back. And if it doesn't fill it in that week, that first week, then you're probably not coming back for a while. So a lot of eyes are going to be watching this area here, where if gold continues this strong move to the upside and doesn't start pulling back to fill this, we might not be coming back for a while. Crude oil next up on the list, and finding a whole bunch of rejection up here. They hit the highs of the channel from the wider perspective, looking for that $50 range still, which still haven't gotten it, but at least they made new highs, got it close. 49, what did they make it up to? 49.84. So, I mean, it's right around the area that we were looking for. I was still kind of hoping they'd get above the 50s a little bit, but nice rejection back down, and it's fairly obvious that buyers have left the station. Nobody's left holding the market up. Everybody's sidestepped it. So with that amount of clearance, well, the sellers have a likelihood of a secondary leg pretty high here. So for a down move looking for a continuation, it would make a lot of sense for wherever the high ends up, looking for an ABCD move to the down at the moment at 48.02. I would prefer to see higher prices in the 49.25s up to the 49.50s to see sellers reject at a better price, and also as a re-entry defense from the earlier selling of the highs. That's the area that's a lot more interesting. It might not go that far, but that's the area that I would really like to see it pull back to before it completes this objective. And over on the euro, speaking of open gaps, the euro is filling that one too, or I guess not filling that one. We've got a big gap away to the upside on the euro, much larger than the one that we saw in gold. They are kind of following hand in hand, obviously, between the two, but the euro's a little bit stronger here. It started off kind of sideways, kind of channely, not a whole lot going on, but I mean, you can see the MACD was relatively strong the whole way through. Finally pinched together and expanded, and now the market's really screaming to the upside. We still have the same rules when it comes to the open gap. You generally expect to see it filled within, the first day, but if it doesn't, it better fill it in that next week, because it might take a while after that. And the bulls seem like they're fairly strong. A lot of times when we have a gap away on the weekend, it's simply buyers hunting for an objective, and that's a big concern for the euro because, well, we're right around that area. This is a big zone that buyers could be hunting for, buying this dip, looking to take profit back at this major resistance high at around the 233s. We've got a little ways to go, but you can definitely see the concern. This market's getting really far up here, and if it can't stick the landing, it wouldn't be a surprise to see it trading back down by those gap levels in relatively short order. All right, and then finally, all aboard the freight train that is Bitcoin, we finally have a pullback right to the area that we were looking for a pullback, down to 28,000. Nice bounce off of that area, giant washout move, and that's really what you love to see. We were talking about this area, I believe it was on the weekly brief. It might have even been on the monthly brief. But this dip down to the 28,000s, that's the bounce area that buyers are looking for. And so far, it hasn't disappointed. Phenomenal bounce off of that zone. And now we're all the way back up into the 30,000s, seeing if the market can break above the 30,500s. That's kind of the point of interest. If the buyers are going to take this as a V-bottom, V-bottoms, well, they're called a V-bottom for a reason. They don't stick around very long. And if the market's going to consolidate here, it's no longer a V-bottom. So it's got to get moving now. This current candle or sooner would be the preferable case here for buyers to get this going for a V-bottom. And if they can't succeed on that, the buyers aren't necessarily done yet. That's usually where they try getting higher lows. And if they're able to hold it off, then that zone defends and we continue back on our merry way to all-time highs. If that fails, though, we're probably going deeper into the zone. And a lot hinges on the next, these next few candles. That's where everything really comes together to kind of confirm what's going on for Bitcoin. Are the buyers going to take it back up on this washout, or are they going to let it dip a little bit further down? Alrighty, well, that's going to do it for today. Like we always say, stay safe out there. Keep those stops in play and let those winners run, especially on the first day of the year. You don't want to mess up the first day of the year. Out of all of them, don't wreck the first time around. Everyone's going to be coming in a little bit slow and groggy. Let the markets come to you. Don't go chasing stuff straight out of the gates. Until the next one, enjoy, rest up, and we'll see you all then. Thanks.